again, the idea is with this session to kind of take a broad look at the utility market. I'll ask some questions that sort of feed a bit off of what I was just talking about and then go off on some completely different tangents. But we have a really interesting combination of speakers here. So let me introduce them and then I'll have them provide a more detailed introduction themselves. First, we have Dave Taggart, the president, COO, and co-founder of Belectric, who I mentioned a little bit ago. Jim Morgenson, the senior manager of strategic accounts for SMA America. Bob Gibson, the vice president of market intelligence for SEPA, the Solar Electric Power Association. And Juancho, Eekhout, the director of origination and portfolio design at SDG&E. So we have representation from sort of various parts of this utility market in the US. Why don't I start by doing this? We'll go down the line. We'll start with Dave. And please introduce yourself, your company, and what you do in the utility market. Maybe give me a 30-second sort of take on your view of the market now.
Sure. So Dave Taggart. I'm with Belectric, which is a global company, PV systems integrator, currently the largest in the world right now. I lead the Belectric North American team. We distinguish ourselves in the market by offering what we believe are the most aggressive performance guarantees in the industry. We do that through effective project optimization of the economics of a project for the market and the site, control of the value chain, efficient execution across the operation, and building on the track record of the parent company, which has now built 174 PV power plants around the world. My outlook on the industry is it's an extremely exciting time to be in this industry. I think 5 years from now we'll look back and we'll say, boy, those were the days. But that's going to be a tough 5 years. But I do believe that there's a way through this, and I do believe it involves a lot of collaboration and working together. I don't think anyone can make a profit and survive in this industry at the expense of anyone else. I think the margins are just too thin, but they are doable, and we are approaching the point where we can be very competitive with conventional generation. That's very exciting.
Thank you. Jim.
Good afternoon. I'm Jim Morgenson with SMA America. If you heard Jürgen speak just a few minutes ago, SMA, $2.5 billion company. I'm going to focus more on what we do in the utility space, and I personally have been involved for the last 2 years working with our sales team, working with application engineering team, and project management to help our customers be successful in these big utility projects. And you know what we see is the market is really growing significantly in North America in the utility space, so the numbers are challenging. You know, a lot of these are the commercial operation date. If that pushes out, then it's a couple 100 megawatt project. It'll change the numbers significantly. But in general, you know, we see the projects getting bigger, the risks getting bigger, and all of the stakeholders involved. And there's developers, there's EPCs, the companies that engineer, procure, and construct, the investment engineering firms, the banks themselves, and ultimately the utilities. They all are looking to accomplish 3 goals collectively. You know, they're looking to produce the most megawatt hours out. And you know, this is not a residential rooftop or a commercial rooftop where you're driving value of green, and so you go through the grocery store and you see that your grocery store is green. This is truly a power plant, and so you want to drive the most megawatt hours you can. The second point is least cost, and then that's least cost up front and long-term operations and maintenance. And then the third, and a lot of talk has been around the bankability issue. You know, they really want to have the least amount of risk possible. So those are the 3 areas of main focus of all the stakeholders, and we find ourselves well positioned with a portfolio of products and what I call a war chest of competencies to help our customers be successful in those. And we're here to share what we can and help you learn and help the industry be successful.
I'm Bob Gibson with the Solar Electric Power Association, SEPA. We are often confused with SEIA. Both organizations are nonprofits working in solar. We're both in Washington, D.C. And we have a business relationship with SEIA in the SPI and the PV America conferences. But where we differ is two big differences. We do not lobby. We're a 501(c). We're about providing information, education, and kind of business-to-business information development, and hopefully progressing towards helping, and the second thing is really the focus on the utility sector, helping utilities better understand the value of solar, help them learn from each other and learn from the solar industry, and bring both together. One of the things that we do at SEPA every year is we look at we rank the utility connected solar by utilities, do a pretty comprehensive survey of that, and we've seen trends in the last couple of years with, while California is still the epicenter, we're seeing utilities from other parts of the country starting to become active in solar to a degree that's somewhat a big shift. Certainly California still dominates, but in 2008, 75% of the utility-connected solar was in California, and in 2010, 63% was outside California. Last year, only 3 of the top 10 utilities in added capacity were from California. So there is diversity going on. And the other thing I would mention just on the start here is we're seeing a rise in utility ownership. That's the latest trend that is rising, a 300% increase from 2009 to 2010.
Thanks. Hi, my name is Juancho Eekhout. I'm the Director of Origination and Portfolio Design with San Diego Gas and Electric. Since the beginning of 2011, I've been responsible for managing our RPS portfolio as well as making tax equity investments. Thank you so much, Greentech, for inviting us to participate today. At SDG&E, we're committed to the state RPS goals and helping the state reach its RPS goals. This year alone, we've signed 16 PPAs for renewable contracts, 1,300 megawatts, out of which 1,000 has been solar. So we've been pretty active, and there's a big journey to go ahead to get to 33%. And today, really here, to share some of our learnings as well as to learn from this impressive panel. When it comes to our thinking of the state of the market right now, I can think of 3 things. The first one is it requires a lot of stakeholder collaboration to get things done in California. The second one is that the industry is still learning, and the third one is that there's a lot of competition.
Great. Okay, let me start with a question that Juancho can begin with, and then we can move down the line. So what I was talking about just a little bit ago, in part, was the fact that there are so many developers and so many projects out there. That means that when a utility puts out an RFO or an RFP, they get a lot of bids in, and so, but they're selecting relatively few projects. And so it's really incumbent on the utility to select the most viable projects. And I would argue that historically utilities haven't been great at selecting the right projects. I think the California utilities may actually have been the best, but that's been a difficulty that utilities have always faced, and it's not going to get easier in a land when we have hundreds of bids for every RFO. So I wonder to what extent you feel like, Juancho first and then anybody else, to what extent you feel like utilities have gotten it right, are getting it right now, and what could they do better?
Okay, thanks, Shayle. Good question. I'll start by saying it is interesting how we find ourselves in different relative leverage positions as the economic cycle of this industry has going. At times the developer has a little bit of more price power. At times the utilities seem to have a little bit more price power. I would sort of concur with you that at present it seems like the industry, the utility is a good place to procure because the prices are competitive. That said, we recognize that we gotta collaborate with everybody, and this is a long term that requires a collaboration between the developer, us, and everybody else to make a success of the industry in the long term. With regards to project viability and the quality of the choices, I think it's fair to say that we are learning, that like the rest of the industry, can we do a better job at picking the right projects? Well, the first thing to take into account is that the process and the rules are designed in a way so that price is king first and then viability comes second. In an RFO, you gotta pick based on price, you do your shortlist based on price, and once you have the shortlist, then you can perhaps prioritize based on viability. In 2011 at SDG&E, we were quite keen and quite happy because when we cross-correlate the proposed shortlist for our RFO, it correlated very well with the viability sorted list that we run in parallel. So what that says is that the projects that we actually picked, the most economic ones this year, happen to be ones that are viable. I think the industry is evolving. I think the average success rate for the industry right now is 50% in California. That means that, well, for every 2 PPAs you sign, 1 is going to go live and the other 1 is not. And 8 out of 10 projects are late. That's historically. Prospectively, I think based on where we are, at least we feel that based on learning and based on having actually, you know, maybe done a better job within the price constraints of picking the most viable projects, prospectively, we think this is going to be 66. That's where we are right now, 2/3. Having said that, because in the current legislation, the compliance, there's no earmarking, so you gotta be where you gotta be at the time where you gotta be. We make procurement decisions based on probability weighted positions. So for every 2 projects that we buy, if it's 100 each, and you assume a 50-50 probability, just for the sake of the example, we assume that we have bought 100. So if our target is 200, we need to buy 4 of those projects to be there. So we do take viability into consideration, but it's what I have to say as a portfolio manager of SDG&E is that things change a lot, and we assess these probabilities almost every month with the existing portfolio as well as with the prospective portfolio, depending upon the events in the industry.
I just take a little bit different, from a different place in that looking outside of California where utilities have a very active market and have a lot of experience. A lot of these utilities in other states have a lot to learn about the solar industry, and they also, there's a big disconnect that we hear from both sides, from the developers and from utilities, is that they're speaking different languages when they're new to it. Utilities obviously have a lot of experience in procuring generation resources, but the solar resource is different. And it's a challenge to a lot of the states that are just coming up and the utilities that are just entering the solar. We do an educational training workshop where we put on a basic course for solar providers to learn about the utility industry, and we put in there things about what are utilities looking for, how do the terminology utilities use, which can be very daunting, what utilities want to see in an RFP, what matters to the utilities. We're trying to bridge that gap, but it certainly does exist.
Our exposure to these projects is kind of an interesting view. We see projects that come in with people who have never been involved in a big utility project before, and there's really, I'll call it 2 segments of the utility industry developing. One is the triple-digit projects, 100 megawatt and up, and there's few players in that area, and they're well experienced. And then there's the 20 megawatt and down, and that area's got a lot of players and a lot of people graduating from residential or commercial rooftop to now going after these 20 megawatts. And the ground rules around grid interconnects are a little easier on 20 megawatts and down. So, but in all cases, we get pinged through many, many different angles on requests for quotes, and it's always very early, and of course everybody needs it yesterday, and we provide that information, and then these things go into the black hole for a while. From our experience, the best value that we can provide into that sales cycle is really to upfront getting involved deeply on the application engineering side. And I know that Ron, your perspective is give me that price, and we'll then evaluate you. And our view is, well, the price is important, but we've got to figure out a little more of the detail and try to optimize that system, the combination of megawatt hours and the cost, first cost and long-term cost. And so some of our most successful customers have come to us early and have said, here's a project that I'm considering working on, and we work together on it. And we work to drive cost out and energy harvest up, and then by the time it gets to you, they should be really well positioned price-wise, and that project should flow.
Yeah, so I'll just a couple of quick comments. So I think the infrastructure in the United States, as most countries, was built around large central generators, and And that's how it's evolved, and that's how it's structured. And when you suddenly have 1,000 people showing up at your door saying, I want to build a generator in your district, it just doesn't work that way. So I think there's a fundamental reassessment of how we do these projects, and I hope that that takes place. And there are some utilities that are doing better than others. So I think a lot of the question has to do with who you ask. I think some of the things that I see as promising are putting commitments on the COD dates, requesting a lot more money up front as you get into the queue, and that'll tend to weed out some of the ones that are more borderline. I think we could maybe do some sort of auto approval between the utilities and the PUC would be helpful to get them out of that loop. But I think there's a long way to go. And at the end of the day, the grid and the infrastructure in the U.S. will be a lot more robust with a lot more distributed power on it, but we've got a long way to go to get there.
Let me follow up on something that you mentioned just there that I was going to ask anyway. So I'll ask you and then have Juancho jump in on it, which is, it seems like there would be one fairly obvious way to at least improve project viability among those that are selected, which is to make developers have more skin in the game, make it cost more. The more you charge them up front, the more incentive they have to actually get the project done, especially if it's non-refundable. And you might end up with less of the developers that go out there and bid on projects hoping to sell them, which is a risky endeavor. You could do it in a bunch of ways. You could do bid deposits. You could try to go the route of interconnection deposits. There's a bunch of ways. But fundamentally, you could charge a lot more up front to get anywhere in any queue. But the danger with that is that you then are favoring companies that have a big balance sheet, right? You're favoring anyone who can afford to spend a lot of money on these projects. Do you view that as a problem at all, or is that really okay because what we're trying to do ultimately is get these projects in the ground?
Well, at the end of the day, sooner or later, someone's got to have a balance sheet on the project, so I think that's got to happen. I think the way it is right now, it's not working very well, so I think we should try some things and see if that helps the issue. Another way of doing it perhaps is just a crazy idea is the way we buy homes, we get a pre-approval on the loan. Maybe what we need to do is structure our projects and everything is done, and you get your long-term investor to give you a letter saying, if you get this PPA within this range, it's a done deal, and take a lot of the risk out of the project.
Juancho, do you have any viewpoint on do you care if the developer is a big company or a small company?
I do. I guess I'll start with, I said something, I want to set the record straight. Price is the key to getting into a short list, right? But we do have the right, if we see that a project is way cheap and it just doesn't hang together, we do have some leeway to not assess formally projects if they just, you can just see that they're not conforming. But we have to be, generally when we do that in conjunction with the independent evaluator endorsing our judgment. Okay, so it's a tricky process, but I don't want you to live with the opinion like, well, if you bid real cheap, but it's just a paper project, just a piece of paper that's going to get you anywhere. Yeah, there are some diligence that we do before getting into a short list. To a second question, it is a tricky dance in that, on the one hand, we as a utility, we want to help the industry by not putting ex ante too much burden from a collateral perspective in the project so that the industry can actually develop, and at the same time to be inclusive to the small companies, the medium-sized companies, and the large companies. Having said that, we have been, over the years, putting collateral requirements that we believe are merited, and when you compare them against what you would do in the commodity world when you do a gas deal or a power deal or an oil deal, they are still, favorable to the industry to recognize it's a development industry. But we do today, we have a bid fee that just to bid, you gotta, put down some money. Then we have a construction collateral that you have to, if you're not big enough, you have to post an LC. If you're big enough, then you have a guarantee, parent guarantee, and then there's a post-COD as well collateral. So we do like people that have a skin in the game, and we look at that, but at the same time, we don't want to make it so expensive that it doesn't, on the one hand, allow small and mid-sized companies to get in the industry, or on the other hand, make it overly expensive so that the industry cannot develop.
Bob, let me ask you this one. So SEPA is, if I'm right, you have a couple hundred utility members at least. So you probably have a lot of visibility into what utilities are saying. And one question that I've had for a while is, how do utilities look at, and then how do developers look at contract renegotiation? When there's a PPA in place and something happens, market dynamics don't play out right, or there's some delay, and the contract gets renegotiated. I think on one hand it's good, you know, we want these projects to move forward. On the other hand, if it's a known fact that you can renegotiate contracts later on, then there's less of an incentive to get the project right in the first place. Do you ever have that conversation with members? And
Haven't had that conversation exactly, but you know, there certainly is the regulated utilities. You know, what's the regulator going to approve? And you know, if the contracts are brought, the regulators, like in California, obviously there's both a huge push for the development of solar, but also now a very strong push on keeping solar as close to in line with other resources to keep rate pressure from building too much. So I think there's that. The utility's feeling a bit in the middle on that. But I don't know, maybe Juancho has a view on that, being the utility guy himself.
Thanks. I thought you would going to put it my way anyway. So this is a tricky conversation. I think at SDG&E and all the utilities in California, and I'm sure you guys are on the same place, we believe the industry to be solid in the long term, you have to have two things. One is clear rules, and two, that the industry and everybody respects contracts. Okay, that's how industries develop successfully in the long term. Having said that, because there are a couple of things that are going on the one hand, there is a tremendous lag between the time you get shortlisted in a PPA, and it takes about a year total between you get shortlisted, you negotiate, you execute the PPA, the utility writes a advice letter, files it, and then the commission, it goes through a process. It takes about a year, and the market has been moving up and down significantly in that time frame. So when you get shortlisted in a project, there's a big time frame between the time you get shortlisted and the time where you have the 5 commissioners talking to each other and saying, hey, is this contract fairly priced? When you look at the price, the history, I was looking at it before I came here this morning, you know, 2004, the industry sort of started going up, and sort of it reached a peak in 2009. During that time, it was the other way around. It was developers that were catching up to a market. They had a signed contract, but they had to amend the price to make the project viable, and they were knocking on the utilities' door to amend the price, and then to go to a commission to prove that they needed that price increase to make their process viable. That happened a lot, and a lot of those price amendment requests got approved. Since 2009, we have the reverse completely. The price has been coming down just in the past 12 months, at least 30%, and the commission is taking a harder stance and saying, especially in this economy where customers, you know, are not having the best of times, saying, hey, to the extent that the developer has room, is there anything here that can be done? And the commission has taken a stance when there's a material deviation, and I think it's fair to say that if a developer out there has a signed contract that is still awaiting approval, and that for whatever reason that developer feels there is room in their economics to improve their price, and they want to put their best foot forward with the commission before approval, they always have a voluntary option to approach the utility and decrease their prices. A couple of developers have done that with us this year, and their tactic has worked because some of them have gotten approved.
They voluntarily decrease prices?
Yes.
That's impressive. So, next question. I think Dave, in your intro, maybe it was Dave, mentioned that we're getting closer and closer to the point where utility scale PV is competitive. And I guess my question, I have two related questions. We could start with you and then move down the line, because I think everyone might have an opinion here. First of all, what does that mean? What are we trying to get competitive with? Is it the LCOE of a peaking natural gas plant? Is there some specific metric like that, or is it something broader? Does it depend by location? You know, do we have a magic point where we actually are competitive, and what does that mean for utility scale? And a related question, when do we start seeing contracts get signed outside of RPS standards? Right now, the utility market is almost entirely driven by RPSs, with a few exceptions of municipal utilities. When do we start to see these contracts get signed when there's no regulatory requirement for that?
Okay, well, the second question is easy, when PV power is cheaper than what they pay right now. So that would take care of the second one. And I think we're really close to that already. So there are contracts, I think there's about 4 gigawatts worth of contracts in PPAs in California right now that are prices below peaker natural gas plants. So we've solved that problem. There are prices that are being bid in contracts at or near natural gas generation, not the peaking generation, but straight natural gas. And if you look at the trends, we're easily within 2 to 3 years of nuclear and new coal, I would say. And there's been some data floating around just the last couple of weeks that bear this out, although I would say the estimates were a little conservative in that data. So I think we're seeing numbers between 11 and 13 cents per kilowatt hour still, and you're right in the neighborhood there at that point, I would say.
Any thoughts on
Yeah,
that?
I'll just follow suit that, if you break the market into its 3 categories of residential, rooftop, and then utility, they all feed back into the utility. And we see examples today where utilities are doing their own leasing programs out to their customer base. And in that case, and it's location dependent based on sun and how much energy is really available. But, this notion of grid parity is being hit in many pockets today around the country. So the need to continue to push the cost curve is absolutely there. We need to keep driving it down jointly as an industry. And every time we drive it down a little further, I think we'll see the market take an exponential increase in volume. So, the signed contracts outside of RPS area, I think, again, that when you talk about avoiding cost, instead of putting in, a new, huge power plant of some other technology versus 100 megawatt of PV, because you need to offset that peak load that happens, the payback to that is very fast. So again, I see lots of niches today, and the lower we push the cost, the greater the volume we'll have.
Yeah, I think that there's one thing, Shayle, you mentioned the municipal utilities, and I wouldn't, if there is a sense of dismissing it as a few municipals, but I think you're going to start seeing municipals and co-ops, some utility names you've never heard of before, start to buy solar and to do meaningful programs. Those that aren't regulated but not regulated by regulators for the most part, but self-regulated or regulated by their cities or their members in the case of the co-op. And if they have a particular driver that might, a lot of it is like economic development. Yesterday, one of the speakers mentioned the City Public Service of San Antonio with their 400 megawatt RFP, which has a very strong economic development component in it. And American Municipal Power up in Ohio has a similar thing. They have a contract for up to 300 megawatts of solar. They don't have an RPS to meet, or some of their members might have very, very minimal requirements. But they also have that economic development driver. They've gotten one company to move into their service area, the area of their municipal systems, and they'd like to see more. And they see diversity of resources as a strategic choice for long-term viability of their utility. But for the most part, it is economics. I mean, I would say in the last 2 years, I've seen the skepticism that was once there with a lot of the utilities you don't know really evaporating, and they're taking solar very seriously. But they are looking at their costs. They're at a time when demand is down because of the economy. They don't need new power generation right now. And when they're going to add resources, it's got to be cost competitive. But I got to tell you, they're very, very, very interested in doing so, and they take solar very seriously.
Just a couple of comments. Just to make sure people are clear on these headline conclusions. Whilst it is true that in this year, the renewable prices were at or even below the NPR, which is the gas proxy, right? There are two things that are we need to take into account to judge sort of grid parity. The first one is that in order for the developers to be able to beat those headline prices, they're still counting on the subsidies that are now in place, the PTC, the ITC, or the cash grant, and those play significantly into economics. I know there's a lot of research out there as to say, okay, well, our industry's also got these subsidies actually more than the subsidies that the renewable industry in the US is receiving for longer periods of time. So hopefully they stay, but if they go away for some reason, that will no longer be the case, because they do rely on the subsidies to be at par. And the second thing is that the NPR, which is the curve that you use to compare whether or not you are at parity or not, assumes in it a contango curve in the natural gas price that is rather aggressive and actually hasn't taken place in the last 2 or 3 years, where you see sort of the forward in the gas prices doing like this. The curve is in contango, but the spot price is staying really low. So those two things that are to take into account to judge the competitiveness of this industry. I think prices are going down and the prices are still competitive, but those two caveats make a big difference in those conclusions.
Yeah, I mean, that relates to another question that I'll open up to anybody if they want to address it, which is the impact of gas prices, basically. You know, we see it directly in California if the NPR gets revised downward. But apart from that, what impact is that having in terms of procurement from utilities? If gas prices fall substantially, if we open up a bunch of new reserves in Pennsylvania, for example, and gas prices go down a lot, are we going to see utility solar procurement take a hit? Or is it so driven by regulatory requirements at this point that it's divorced from the price of the alternative?
It's a very good question. I think it will play into the debate, but I think the RPS is the RPS. Yeah. There's no going back on that. And to your earlier question, whether utilities are going to be discretionary procurement or not, right now the utilities, the farther that it is, the one that is farthest ahead in California, I think is in the mid-20s. We'll see the numbers in March. That's to say that, hey, we're all far from the 33. We're doing the best we can, but the next 5 years we're going to be focused just on meeting requirements.
Yeah, I definitely think there's the regulatory push, but there's also the reality that gas-fired plants and other types of conventional generation take a long time to get permitted and built, and they still are quite, I mean, most of them depend on combustion still, which is an environmental issue, and that slows things down as well, whereas, you know, gigawatt PV power plant can be installed and permitted within a couple of years. That's in a tremendously short time frame compared to conventional technologies.
Next question, I'll ask this one, I guess, to Jim to start, and then anyone else can jump in. Let's talk a little bit about grid stability, and at what point we actually think that, you know, increasing solar penetration on the grid will start to have an issue. What role can inverters or other, you know, grid operability parts of the solar system play in mitigating that? When are we going to start to run up against problems there? Are we anywhere near that point?
Yeah, that's a good question. In fact, that was going to add to the previous comment. You know, some of the holdback at the utility level is, you know, nervousness about, you know, is this going to help my grid or is it going to hurt my grid? You know, bringing in some little bit of penetration of PV, and as it grows larger and larger, and then you get these big plants. So we look right now a lot back to Germany and some of the experiences that happened there. And there was a weekend recently in the summer, this past summer, where there was a lot of industrial factories turned off, and windy, sunny, beautiful day, and the grid got to be 30% or even higher on renewables. And you know, so in the right conditions, you can get to a point where, you know, the percentage is very high, and that's nervous for folks here. But the rules were set, and features were designed in on what we call grid management features for how to manage that. And if there's a frequency issue or a voltage issue or requirements of power factor, the products that most of the inverter companies are shipping here, SMA in particular, include all those features, right? So we consider ourselves, you know, really helpful to the grid, and the PV plant ought to be an asset to that utility and not a liability. And so along with that, you get, you know, SCADA and plant control technologies and solution sets that are part of the PV plant that looks at that point of interconnection. And, you know, there are certain concerns that if you ever go over, say, the 100 megawatt limit, you've violated your interconnection agreement. That's a big deal. But at the same time, when you're at 99.99, you want to get as much energy out of that plant as you can. So how do you do that while you're pushing VARs, which is not real power? So all of these things, you know, come into play. But I think the experience is that the technologies are here today, and every plant that we do today, the learning cycles, they're getting more and more comfortable and confident in it. And you know, so I think we're all headed in the right direction.
Yeah, I think so too. And, you know, grid stability is certainly an issue, and, you know, but utilities are very, you know, conservative for a good reason in managing their grids, because reliability is everything, and power quality. And certainly PV, you know, can have an impact on that needs to be managed. But it can be, and I think the big key is the whole smart grid evolution. And I don't mean the smart meters, but the whole communication controls with the smart inverters. And there's some utilities that are real leaders in this, and they're everything from small co-ops to large investor-owned like SDG&E. And but they need to both model and get experience with their grids and operating. And I think a great asset has been the DOE's program through the CGIS program, the Solar Grid Integration Program, where you're doing things with the power electronics and the communication and controls, bringing utilities, inverter manufacturers and other manufacturers together with researchers, and actually developing both better standards and better capabilities. There's still progress to be made, particularly on communications on the grid, but it's all very promising. I think most utilities are probably fairly confident all this is going to be managed well. They just want to get the experience, and they want to do a good job of tracking. And I know SDG&E is, their grid is mapped out by their engineering folks, where a solar developer, I believe, can have access to looking at a circuit by circuit case where the circuit has capacity to add a variable resource like solar, and where that circuit might be weaker and would not be a good place for a solar installation. So I think as more of that communication develops, it'll also add to everyone's comfort level.
Yeah, and I'd like to add to that. In Europe right now, a big topic is the energy internet, and for us, it's the smart grid. It's basically the same concept, but forecasting and trying to predict, what will the day look like tomorrow, or really what will the next hour look like, and how do we help the utilities view a PV plant like it's a square wave, not a nice bell curve as far as power. And so energy storage is becoming something that's slowly working its way into the mix, along with communications and coordinating all that to get clean, reliable power. So those are being proven out now, and they'll come here next for sure.
You got time for one more comment, or please? So I'll just say so grid stability or grid services, as we would call them, I think when they roll out depends a lot on geography or proximity, let's say, and project size. And reactive power it's a part of the grid. The manipulation of it is a necessary part of the health of the grid. As more and more distributed generators get out there, it's actually a benefit to the grid to have PV being those generators because of the inherent capabilities in the equipment that go into the power plants. So some projects right now, I would say, are large enough where grid support is important today. Many of the larger projects, if they're placed in industrial areas, I think can play a part today. They will become more important as we get more power on the grid. Storage, as Jim mentioned, will become more important as we get more power on renewables into the grid. But even today, also, storage is important in some cases to manage intermittency, for example, or on areas like the islands where they're dependent on oil for power generation. So I think it's already happening today, and the equipment that is inherent to a PV power plant is well suited to providing a lot of what we classify as grid support services. But they will be more the need will be intensified as we get more renewables on the grid.
Yeah, and I think you raised a kind of a point there that I'll make very quickly, and then we'll open it up to the audience for a couple of questions, which is storage, and the idea that later on we're going to need solar to work very closely with storage, or maybe with peaking natural gas or something like that. And I think later in the afternoon when we have our session with CSP, that's probably a theme that you'll hear. There's an argument to be made that CSP may look bad relative to PV now, but it plays very well with storage, at least some of the CSP technologies. And so maybe there's an opportunity down the line for CSP to reemerge. With that, let's take a couple of audience questions. I think we have a couple of minutes to go here, if there are any. Please, right here.
This is a question for Juancho. Looking at the RPS compliance reports for SDG&E, it indicates there's no real new demand for RPS eligible generation between now and 2016 and 2017. Can you comment on that? And also comment on fallout rates that you expect and repowering of existing contracts that may expire between now and then.
Let me just repeat the question in case anyone didn't hear it. The question was for Juancho, basically the current RPS compliance plan, if I got it right, indicates that SDG&E has no need for new renewable generation until 2016 or 2017. So can you comment on that and then how it's going to play out?
Sure. I wish that was 100% true, and I can go to the beach until 2016. It's not quite, not quite. So the RPS legislation splits into CP1, CP2. CP1 is 11 to 13, CP2 is at 16. So between in CP1, which is 11, 12, and 13, we have a need. And as I said at the beginning of our presentation, we have signed 16 contracts this year, and we just closed an RFO. So we are buying a lot of contracts, and the focus right now that we have is indeed in projects that have near-term CODs. As a matter of fact, the next one we're anticipating in signing is a project that is under construction. So that's where, coming back to your original point, it has to be very viable and coming online soon. I think our position in 2016, to your point, is one where we don't have that big of a need. We do have a need, but we are actively managing because a lot of the projects that are in that bucket may lose, right? Like last week, we had a project that we all thought it was going to start construction in 1Q and couldn't get financing. These things still happen in the industry. And every time things happen like that, well, we take it out, rerun the model, what's the new need, and then go down the list in the RFOs to contract for a new one to replace it. So I think your comment, CP1, we're still looking. CP2, hey, we're more comfortable there, but that doesn't mean we're not going to buy in CP2.
One more question? Right here.
Hi, Mike Mendelson from NRO. I had a question on the letter of credit requirements that you mentioned before. Could you give a range of what's required and at what dates that's required, and how a developer may be excluded from letter of credit requirements? Okay,
so part of that answer is confidential, so I'm going to have to keep it high level, unfortunately. But there are 3 junctures, right? So the bid fee, it's something that is hopefully affordable for everybody that's in the business. Let's put it that way. If they don't have the money for the bid fee, then yeah, they're not going to have the money to finish the project. When it comes to the letters of credit, the only way that we can sort of completely waive that, you have to be almost like a publicly traded company, so to speak. It has to be big. So most companies, if they're small or medium developers, medium-sized developers, they will have to do a letter of credit. Having said that, the cost, we have found that at least for the last 20 projects that I have seen, nobody has said, hey, we absolutely cannot afford this, and unless you put it down a little bit, we're not going to go. And I guess we can have a conversation on a one-off basis. But at this juncture, if at all, I think it's lower than all utilities, and people can think of it reasonably. And then you ask about the timetable. So one, when you sort of like get shortlisted, a condition to get shortlisted, you have to submit the first check. The second one is when you start construction, and the third one is after COD, and then it increases over time.
All right, and with that, I think we're out of time, so please join me in giving a warm hand to our panel.